A world powered by the blockchain is being formed right in front of our eyes. Experts are calling it the Internet 3.0, the next digital revolution. It's leaving many investors and even institutions looking for a path to take an early position in this massive opportunity. Bitcoin, Ethereum, Ripple, Dash, it's all speculation at this point. But what is certain is that the most profitable businesses for cryptocurrency and the blockchain is in the actual creation of these coins. This is why some of the top early adopters of Bitcoin, blockchain miners, fund managers, and even billionaires have come together to create a new vehicle to invest in the blockchain core itself. Get immediate access to this new company by going to crushthestreet.com/Bitcoin.
Hello, everyone, and welcome into crushthestreet.com. I got someone on the line that I've actually been wanting to interview now for some time, and he's a first-time guest. We're going to talk about the crypto space and all that's going on in Bitcoin and all of the other cryptocurrencies as a whole here. His name is Jeffrey A. Tucker. Websites, fee.org, liberty.me, jeffreytucker.me. We'll have the links in the description. But Jeffrey, what an honor. Thanks for coming on Crush the Street.
Hey, it's great to be here. It's a good day, good time to talk about Bitcoin. There's always a good time to talk about crypto.
Well, I've just got accustomed to saying Bitcoin is at an all-time high. It's close to an all-time high right now. I know it hit 19,000 for a short while. But, man, it's just so exciting out there right now. But if you would you please just give everyone a little introduction to who you are for people who might not know you by way of introduction?
Sure. Well, in terms of my crypto, I have a general introduction. I've been building digital spaces since 1995, really, and built free.org, Mises.org, laissezfaire.org, I believe it is, and many other digital spaces that are devoted to distribution of information. You know, I have a profound some people would say a rational attachment to the idea of human liberty, and my education is entirely in economics, but I'm in love with digital spaces, and that's of course why I got involved in Bitcoin. I had been reading about Bitcoin since about 2009, actually, but I was really incredulous towards the whole thing because it's an extremely unusual technology in a sense. It's not the same as any academic will tell you money is supposed to be like, And so it took a while for me to kind of overcome my incredulity, but by 2013, I was all in and very excited. Then I realized something really important, something that people don't often think about. About 100 years ago, money came to be fully nationalized, and it wasn't really the case in the 19th century or the 18th century. There was still a lot of decentralization. I mean, most coins in the United States that circulated in the early 19th century were foreign coins, and that was made possible because there was a single standard. Well, there was a precious metal standard, so it was gold and silver essentially, and there wasn't a big fuss about. Nobody cared like what money you used, but in the 20th century, we got these things called central banks. And there was a real presumption behind central banking. The idea is that, now let's be clear, the central banks are different from national banks. National banks used to be banks established by the government or chartered by the government to serve themselves. Central banks were really different because they were supposed to be, the central clearinghouse for all banks in the country. And it became a kind of a cartel. And with that came monetary centralization, because one of the presumptions behind central banking is that you have to have a money monopoly. All money in society, or I should say in a single nation, has to flow through the same system. And that becomes important for tracking it, for taxing people, and also very crucially and absurdly for macroeconomic management. I mean, it was a widely held belief in the past that you could manipulate the money and therefore cause all kinds of other things to happen, like unemployment to rise and fall, and you could directly control inflation, and you could cause a boom, you could cause a bust. I mean, it's all a little bit absurd. in retrospect, because you can't do that. But the critical thing that happened with the advent of central banking, and I didn't realize this until Bitcoin came along, was that money stopped improving as a technology. Now, we don't often think about money as a technology, but it is. It's a technology like anything else. It's a practical art, like any other good or service you use. It just so happens to be the most valuable good out there, and it should be subjected to the same technological improvement that you would get in cars or phones or anything else, shoes and clothing or kitchen appliances. But with the advent of central banking, monetary improvement stopped. And by the end of the 20th century, we were still using the same monetary technology as we were using a century earlier, except it was worth a lot less. That was the only difference. Now, there were payment system advances about the middle of the 20th century in the form of credit cards, which are sort of trust-based systems. And those were, I guess, an improvement in a way, but not that much of an improvement, and they didn't change much. And certainly nobody had the idea of uniting money and payment systems into a single entity, into the same integrated system, much less disintermediating these systems from the central banking. So I realized that that's exactly what Bitcoin did. I mean, it was such a dramatic improvement in our monetary technology. The only analogy I kept thinking about it would be like if you went to a showing of Model Ts in, say, 1917 and drove up to it in a Maserati and just started waving around the crowd. That's sort of what Bitcoin is relative to the dollar.
Jeffrey, yeah, no, thanks for that. That was incredible. And it's amazing that you had that foresight to trust Bitcoin in the early stages, because I think we've, at least many of us, we've been okay with dipping our toes in the water at any stage. I mean, even if it was 2015, we didn't have the solidified future that we have today with all the infrastructure that there is today around Bitcoin. So even back then, when Bitcoin was, say, $250, you had to have some foresight and, a lot of wherewithal to say, okay, I'm going to put a significant portion of my portfolio into Bitcoin. Now, if you did, man, you would be doing really, really good right now. Well, and I'm very happy. I'm just, let me finish before.
Yeah, go ahead.
It's been very beneficial for people, and I'm very grateful for the gains that I have had in cryptocurrency, but it's always been that dipping your toes in the water, at least for most people. It's very rare that you find someone who has gone all in on cryptocurrency, especially in an environment like this.
Yeah, there have been several waves of selling that have taken place in the course of crypto. I mean, I don't want to make this whole interview about recollections, but I have so many intense ones because I think I was all in when it was about $14. And then I remember it went up to 30 and everybody said this is a ridiculous bubble. And even though, I believed in the technology, I wasn't entirely sure that wasn't true. So there was a series of sort of, run-ups and then crashes and run-ups and crashes. And it was pretty scary times. And the first big one I really experienced, once I went public, and this was interesting because I went public with my love of Bitcoin in something like March of 2013, where I was actually putting my credibility on the line and putting my name out there going, with all my knowledge and all my connections and all my belief structures and all my education, I really like this currency. And I was pretty much the first guy with, an established reputation and name out there. I was working for Agora Financial at the time to embrace this thing, and I couldn't believe it. I mean, the amount of opposition I faced. I mean, I was trolled so hard, and people were laughing at me, saying I'd fallen for a Ponzi scheme, that I'd lost my mind, and so on and so on. I mean, I faced so much of this stuff throughout that year. It was strange. I mean, I felt abandoned in a way by my previous fan base. My theoretical colleagues and economists and colleagues were just saying that I had, what was wrong with me, that I couldn't believe that you could make money on the internet. That's just stupid. And so it got really scary. And I didn't want to wrap up the credibility of Bitcoin with this dollar price ratio. I mean, as far as I was concerned, we had obtained proof of concept on October 9th, 2009, when first posted price came out as something like a 16th of a penny. I mean, that was enough for me. But because this valueless thing suddenly, obtained a market value, that should have been proof. But nonetheless, it was pretty scary because people were following my advice, buying in at 30 and then having it crash down to 18 and then getting all kind of hate mail. You can imagine. And then I remember when we suddenly soared up to something like 325 or so, $28. It got pretty out there, and people began to say, "Oh, maybe you have something. There's something to this technology you're talking about." But then it crashed to 80, and that was one of the scariest days of my life. I tell you, because I felt like my whole credibility was on the line. I mean, I didn't want it to be, and I knew that even if it crashed down to 8, it didn't actually matter. I knew that intellectually, but I swear I sweated it out so hard. There was about a 48-hour period where I went from riding high to having my reputation. I mean, this all sounds so maudlin in a way, but it was very intense in those days. And I remember calling up some old Bitcoin hands at the time, who people had been in a lot longer than I had, and they're like, "Hey, dude, whatever, just chill. It's going to go up. This is about the technology. Just relax." Well, I couldn't relax. Not in those days. And then there was also a kind of a funny period later when it came back up. And I think this might have been, I have to think back at it, maybe 2014, when a lot of legacy Bitcoiners had decided they had gotten rich from Bitcoin. Can you imagine this, right? This would have been, compared to today's prices, right? And people began to spend like crazy. I mean, these are people who had been mining Bitcoin back in 2010, 2011. Now suddenly found themselves with a lot of money, and they were spending just madly and pointlessly and irresponsibly, essentially. And then I think then we went through several years of it kind of being at a flat rate, and a lot of people disgorged their holdings during that period, just thinking that, well, this is as good as it's going to get. I mean, intellectually, you might have known that it could just potentially $1 million, but nobody really, I mean, when you've got all that money in the bank, you're not really entirely thinking about that. But times have changed. I mean, 2017 is the year now when it's gone fully mainstream, and all the legacy Bitcoin holders are now holding so hard that they'd rather live in a practical poverty than spend even one bit. The culture has changed.
Wow. Well, you know what? I don't mind staying in this reminiscent phase here for a little bit, but I'll prompt you with this. Eric Voorhees recently tweeted something rather illuminating. He's controversial for a lot of people, but he wrote, "It's possible for Bitcoin to be both in a bubble and undervalued simultaneously, depending on your time frame. Just consider the poor soul who bought Bitcoin at $31 at its, the $31 high of 2011. Any thoughts on that, and considering where we're at right now?"
Well, I generally tell people, and I don't like to give investment advice, but my general view is you should buy in anytime. And actually, I have a more extreme view than that. I think you ought to buy in as much as you can, anytime you can, and then don't get weirded out at the next crash. And there will be one. Anybody's a long time in the Bitcoin space knows this. I mean, this high flying prices today are just incredible. I mean, maybe it'll double or triple again, but there at some point we're going to go through another scary dip. And the thing to do is just to be mature and have grown up about it, and get through it, and look forward to the next boom phase.
Is it possible that this scary dip is anything like the precious metals dip we've seen from 2011 to essentially now, where we're way off gold and silver's all-time highs, and just the sentiment really just getting so bad in the space that the cryptos just don't move?
I don't think so. And the reason for that is that crypto is very different from gold and silver. Gold and silver are ancient technology, I guess you could say. That are, the reason for their value is that they never changed. But crypto is subject to market pressure, so it's always improving, and the infrastructure of the Bitcoin space is always expanding, and the markets are global in reach and potentially essentially instant. And you can't say the same thing about gold and silver. So in that sense, I don't believe that there will be anything like a long period of stagnation. That we did experience that stagnation for about 3 years, where it floated around, I don't know, 320, 360, something like that. I don't think we'll ever see anything like that again. Of course, nobody can know for sure, but what we're seeing now is, basically what's happening is that the people who bought Bitcoin in the past are now benefiting from the gradual elimination or reduction of or diminution of incredulity out there. I mean, there's just a ton of people who haven't believed. I mean, I think it was just a couple of months ago that Jamie Dimon, JP Morgan, was denouncing it as a Ponzi scheme and ridiculous and all that. Nowadays, people have begun to think, oh, this is actually real. And it's a little funny to me that it would have to reach basically $20,000 before people would finally come around to what seems incredibly obvious. But yeah, that's the way things are.
Well, I won't argue with you, and I actually tend to agree with you very much. Although I am a little cautious of a sudden change in the environment that could send everyone into a panic, that could put us into some sort of bear market environment. But that doesn't change my outlook on Bitcoin and the future of cryptocurrencies. But I want to ask you about this. Big news today was Litecoin, and Litecoin is just moving through the roof. And we also had news that Coinbase is halting Litecoin trading as the price has spiked. And I kind of want you to comment on, the nature of the way Americans and the world is purchasing cryptocurrencies. And is the price 100% efficient, considering that so many people are up, but you have an exchange like Coinbase, which limits you to $15,000 a week, and you're limited on how much you can sell on a daily basis into fiat. And not many people know about OTC exchanges where they can, dump large amounts of crypto. And I'm just wondering if the price is factoring that in, or are people locked in largely and unable to sell?
Well, that's an extremely interesting possibility. I don't myself understand why people use these services like Coinbase. It's fun to be out there. Well, I guess I do understand why. Is they use it to buy, essentially. It's very difficult to get crypto now, actually. I mean, there's ATMs, I guess, but and then there's these exchanges, and you can buy it on street. But generally, it's actually rather difficult to get. I don't know why people hold large amounts in these services. If there's a limit on your daily withdrawal, that's probably indicative of something. I think much better solutions, and people are going to have to get a lot more sophisticated about this. Cold storage solutions are better, or even just...
No, that explains storage, but liquidity. That's what I'm asking, more or less.
Yeah, I understand. My understanding of Coinbase is that there is not a liquidity problem as such, because it's been true since Mt. Gox that it's expected that whatever coins these companies claim you own, you actually do own, and so they're not going to be living in some kind of weird fractional leveraged situation. If they did, there would be, I think, a dramatic flight from these services. So I don't think they experience liquidity problems so much as they do regulatory problems. I think that a lot of the limits on what you can and cannot do are driven by regulatory concerns. Now, the Litecoin case is interesting. They certainly have the freedom to halt Litecoin trading. What's driving Litecoin in particular might be the growing panic about the fact that, the realization that Bitcoin proper is not going to be a viable means of exchange in the future. I mean, it's just not going to be.
Right.
It can't be. And so people are looking around to figure out, what's the next thing that you're going to use for hand-to-hand trading. So Bitcoin Cash is a player in that space, and Litecoin is a legacy coin that's widely trusted. There are many others, Dash and Monero and so on. But the realization that Bitcoin itself is going to be a final payment layer rather than a daily microtransaction tool has spawned all these other altcoins, and everybody's looking for the next big thing out there. And I don't know, it might be Litecoin. I'm personally shocked by Litecoin. You can look at my portfolio and see just how shocked I am at Litecoin because I haven't actually owned that much of it.
Well, Litecoin is one of those ones that was a silent player. While everything else was moving, Litecoin really lagged the space. And it's almost just the nature of markets. It's as markets do what they do, it's so hard for people to actually make money unless they bought and they sat on it and just held. Because Litecoin went up, 50 and then 80, pulled back down, and you probably sold your Litecoin at that point, went to 100, danced around 100 for a while, probably got out there, and then as soon as you sell, boom, it shoots up to almost $400.
No, that's right. You can't outwit these markets. There's no chance. And some of us have presumed that we can. I mean, based on instinct, or maybe you're a technical trader and you can see these waves and lines. But I think in the end, it's all nonsense. You can't actually do it. But yeah, I mean, for years, these kinds of run-ups would be followed by dramatic crashes. I think I was interviewed when Bitcoin was approaching $7,000, and I just cautioned, that this might not be the best time to get in, because if history is going to be a guide here on these cryptos, that we're probably soaring beyond any kind of sustainable levels. Well, I was completely wrong, and I think a lot of people were really wrong. And this is why I think it's funny. The best advice is to buy and then forget about it, but you can't not look. It's so exciting that you just kind of keep checking, like all the time. I don't know anybody in the crypto space who doesn't just watch their apps all day long. I mean, I just today had a wonderful lunch with the team at BitPay in Atlanta. And these are people who live and breathe this world. Most of them are paid in Bitcoin, with their salaries. And they all know better than to use this stuff. They just buy and they hold. But during the entire lunch, everybody is just glued to the price. I mean, like the typical person at that table for lunch, and we had a lunch with somebody like 15 people, checked the price several times in the course of the hour.
Well, I'm glad I'm not alone. Trace was on the line with me a couple days ago, and we were watching Bitcoin go from $16,000 to $19,000, $300 back to high 15,000s, literally, while I was on the call with him. And he's like, yeah, everyone watching their phones right now, it's like Snortoshi Krakamoto. That's what he called it. But it's true. I mean, hey, we're all human, and we're all very excited by what's going on in the space. But Jeffrey, so, when it comes to cryptos, this hasn't been around for very long, and I'm wondering if there's any sort of metric we can go by to value what cryptos should be valued. I know with gold, economists have used money supply and inferred a price on gold, which may or may not prove itself out to be true. I know Jim Rickards has a $10,000 price target on gold based on how much money supply is out there. But, when it comes to cryptos, there's no PE, there's no earnings model. It's just a brand new environment. How do you value cryptocurrencies?
It's an excellent insight. I think you make a great point, and I think the answer is we don't have a metric. We're entering into a new world. And part of as I opened this conversation with this point, but the problem is that we've not experienced any kind of monetary innovation, essentially, in anybody's lifetimes. So we're experiencing something, completely new. The only real analogies I can think of here are things like railroads, electricity, or if you want to go back, further in time, maybe printing in the Middle Ages. Maybe you want to go back to prehistoric times. The invention of private property as a technology for domestication of grains and animals. Maybe the control of fire so you could cook meat. I mean, this is an epic historic technology, and just to think about its importance. All the things, all the products I mentioned earlier are designed to do a specific function. Make fire, light up your home, internal combustion for fossil fuels and so on, or steel to make bridges and make cities bigger. They all have specific functions. Blockchain technology pertains essentially to all human relationships. So it's hard to find an analogy. I mean, what other technology can you think of that has dramatically improved so suddenly and shockingly our capacity for just doing deals with each other, for contracts, for managing our lives, for establishing the rules of association? I can't really think of another thing that has done that. So it shouldn't be surprising that there would be kind of not a normal metric for this. Nobody really knows what the right price of Bitcoin is. I think in the old days, we used to say it's somewhere between 0 and 100 million. I mean, that's just how that's how random and shocking it is. And anybody in this sector who claims to know, I just don't believe them. I don't think anybody really knows anything for sure. But that's what makes it so tremendously exciting.
Jeffrey Tucker, thanks for coming on Crush the Street. What a dynamic time it is. I look forward to shaking your hand over at the conference in January in Austin here. If people want to learn more about your website, more about the conference, and just more about you in general, please share some closing thoughts here.
Yeah, sure. I've been writing about Bitcoin at fee.org since 2013, actually, and I try to put all my writings up there, and I try not to make them too technical. They're more personal and social, reflective, and broadly theoretical in an economic sense. So you might check that out. I'm myself opening up a new hedge fund actually in the first of the year, so keep an eye out for that. And I tweet at Jeffrey A. Tucker and my Jeffrey Tucker official account at Facebook. So I'm glad to hear from you.
Thank you, Jeffrey, and please come back again to Crush the Street, and I'd love to have you on, and I look forward to seeing you at the conference.
I look forward to it also. It's going to be an exciting thing. We'll have about 1,000 people, and let's shake hands.
All right, sir. Take care.